Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ric Edelman, founder of DACFP and the Truth About Your Future. He joins me to discuss misinformation in the digital asset space and why the focus should be on the technology behind it. Ric, it's great to see you as always. Welcome back to Trade Talks.
Always good to be with you, Jill.
You got it. And there's a lot of misinformation out there, particularly around last year's scandals and price drops that we saw in the crypto space, but they're ignoring what's happening on the technology side of it. What are your thoughts there?
Yeah, it's understandable with Bitcoin falling 70% last year and the FTX and other scandals that emerged. It was easy to get distracted. What people are not paying attention to is that we now have more developers than ever, tens of thousands, creating blockchain technologies. We have more major corporations engaging in this tech than ever before. We have more people who own digital assets than ever before, over 400 million around the world. We are now over $1 trillion in market value. This is an asset that is growing very rapidly, and people are kind of missing the point. That's why I wrote my book, The Truth About Crypto, to help people understand how this works, what is really going on with this technology, because it is revolutionary.
Ric, I think part of the challenge is to the U.S. regulatory environment. It's not quite as clear as other areas around the world, and that's kind of stifling the ability to move forward.
There's no question. Gary Gensler, the chair of the SEC, is on a bit of a rampage. He is doing his best to crush the crypto community and prevent crypto companies from doing business. There is no regulatory clarity. This is frustrating everybody. He was blasted in a recent hearing at the House Financial Services Committee a couple of weeks ago because he is refusing to answer questions. He's refusing to provide a path for crypto companies to work within the regulatory regime that exists. And it's been very frustrating, to the point that some of the largest crypto companies, Coinbase and others, are threatening to leave the United States and do business in London or the Bahamas, where there's a much friendlier regulatory environment. This isn't good for the US economy. It's not good for American investors or consumer protection. We need regulation, not banishment and enforcement.
There's also a lot of myths around crypto's energy usage.
Yeah, a lot of folks mistakenly believe that Bitcoin's bad for the planet. I mean, every company uses energy. All energy usage is bad for the planet. I don't know why we're singling out crypto for this. It doesn't make a lot of sense, especially when you consider about half of all crypto energy is green energy. It's solar, it's wind, it's water, it's geothermal. It isn't bad for the planet. So yes, we do have to acknowledge that a lot of crypto uses energy, but a lot of it doesn't. Ethereum, for example, the second largest digital coin, uses virtually no energy because it uses a totally different technology. So you really need to recognize that the issue of energy consumption is misguided, and it's unfortunately often used as a political point rather than a truly legitimate economic one.
And you'd also mentioned before that we shouldn't focus so much on what's happening on the trading and the price action with some of these coins. It shouldn't necessarily be about Bitcoin, but it should be on tokenization.
Tokenization is the future. This is what's so exciting and why so many of the largest companies are engaging in this in the financial services sector. We're tokenizing everything. We're already tokenizing artwork. We're now beginning to tokenize real estate. The St. Regis in Aspen has been tokenized. For $10, you can buy the tokened coin, and you not only are an owner of the property, you get discounts when you stay there as a consumer. So we're tokenizing contracts, we're tokenizing real estate, rare wine, exotic cars. Virtually everything will be tokenized. Your driver's license in the next 5 years will become a digital token in your wallet. You won't have a piece of plastic in your wallet anymore. We're tokenizing educational records, medical records, employment records. It's safer, it's faster, it's cheaper, it's more secure, easily transferable. Tokenization is really the exciting growth of the digital assets world.
I mean, it almost sounds like it's going to become a utility at some point.
Very much so. I mean, we don't give a lot of thought to our bank accounts because they're so ubiquitous, they work so well, they're so safe. And in the future, tokenization will have the very same thing. It's even safer because blockchain technology has proven to be the ultimate in cybersecurity technology these days. Something new and better may come along one day, but right now it's blockchain tech. And this is why governments around the world are embracing it. This is why law enforcement loves it. This is why the IRS is totally behind it, because it is a wonderful way for governments to protect against terrorist financing, against drug cartels, against against tax evasion. It's a really wonderful technology that allows businesses to operate better, faster, cheaper, safer, with greater inclusion and transparency. What's not to love?
Rick, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.